And joining us now to discuss Bitcoin is Mark Yusko, founder, CEO, and CIO of Morgan Creek Capital Management. Welcome to the show, Mark. So taking a look at Bitcoin, great to have you here. So, do you see a break below 30,000? What's Bitcoin doing right now? Are we headed for lower lows?
Yeah, look, there's a number of really, I would say, concerning, probably not troubling yet, but concerning items. You pointed to one. That downward descending triangle is a very bearish pattern. That's what we saw in the summer of 2018. We broke below 6,000 and there was a free fall all the way down to 3,200. And again, I'm not predicting that, but certainly when you get that congestion around that 31,000 level, it was actually 31,163 was the kind of neckline of that big head and shoulders we've made really since February. So there's a lot of unwinding going on. There's a lot of deleveraging happening, and that's usually not good for short-term prices.
What do you see as some of the biggest risks to Bitcoin right now?
I would say the short-term downward momentum is a risk. Now, that said, I've never probably been more bullish on the long-term perspective and the upside for the network and for accumulating ownership of the network. I talk about this all the time, right? Price is a liar. The daily price has nothing to do with the value of the network. The value of the network accretes every day. The more users, the more participants, the more active development, the more projects around Bitcoin, things like DeFi on Bitcoin. All these things are very, very bullish long term. That said, my personal opinion is we had a situation where the end of last year into the first quarter this year, we had a lot of free money handed out to people, and people turned from speculators literally into gamblers. They were chasing a moving price. They did it with leverage. That's always a very dangerous thing. Leverage can never make a bad investment good, but it can make a good investment bad in the short term. And so I think that all led to this place where everyone was looking at the same model. Everyone was looking at stock to flow. Everyone was sure we were going to 100,000 on Friday, which was kind of the estimate a number of years ago.
Is that still going to happen by the end of the year?
Pardon?
Is that still going to happen by the end of the year?
I'm probably in the no camp. My partners are probably in the yes camp. I think, my personal opinion, I think what happened here is this cycle was truncated. I think some big shorts got on the other side into February and March, and they truncated this cycle. So we were probably headed well into the six digits with that run past 64K, and with the environmental FUD, which is just silly, just absolutely silly. But with that and the Elon tweets, again, silly. I think this cycle may have been truncated. And so now we've got to consolidate again before we draw back those speculators. Because speculators are what drive price away from the fair value. Fair value is going to continue to rise. I think by the end of this year, it should be closer to 50,000 fair value, 100,000 next year.
Is it a buying opportunity right now?
I think every day is a buying opportunity. I say this all the time, right? You should buy some today.
Yep.
You should buy some tomorrow. You should buy some next week. You should never buy it all at once. You should be accumulating using dollar cost averaging. And the most important thing is to own a piece of this network. This is the most valuable computing network our planet has ever seen. It is the most valuable network we will probably ever create. And owning a piece of that network is the most important thing for all investors. That's my thing on Twitter, #GetOffZero. If you have zero exposure to this, I actually believe you're in violation of your fiduciary obligation if you steward other people's money. And for your own money, I just think it's a foolish place to be today relative to a diversified portfolio.
Mark, a complementary to Bitcoin and the crypto markets are stablecoins, and that is getting a lot of attention right now. What do you make of Janet Yellen, central bankers, Paul Krugman, and the latest academic paper by a Fed attorney and a Yale professor, saying that stablecoins are reminiscent to the pre-Civil War period of free banking in the United States that featured bank failures and monetary instability.
Yeah, look, I think it's a very interesting attempt at diverting away from the real story, which is the innovation. And look, the bankers have been doing this forever, for hundreds of years. The banks have had a good run for 700 years. They've been the trusted third party, and that has now gone away. What blockchain technology enables us to do, and Bitcoin in particular, is to create a system where you and I can exchange value without a trusted third party. Banks don't like that. And the big banks, particularly the central banks, don't like it a lot. And whether it's the BIS, whether it's the Fed, whether it's other central banks around the world, it's not shocking for incumbents to throw shade on innovative upstarts. And it's like JP Morgan at the turn of the century had famously quipped, I like a little competition. So the trust companies popped up in the 1900s after that post-Civil War period, and they were doing great. Knickerbocker Trust was doing fantastic. People were trusting it, and they spread a little rumor, arguably maybe it was JP himself, run on the bank, and magically JP and John D. Rockefeller bailed out the system and further consolidated their power. And then 6 years later, with Amory Aldrich, who was John D. Rockefeller's father-in-law, they created the monster from Jekyll Island, where Janet has sat at the Fed. And since then, they've been devaluing our currency and stealing wealth from the masses to give to the top of the food chain. Look, we have the highest wealth and income inequality in the history of the world. And it's because of this system of systemic inflation. Inflation is not good. Inflation is theft. And a deflationary currency like Bitcoin or like other stable coins are certainly a threat. And I liken it, Christine, to the turn of the century again. There was this invention called the horseless carriage. And the people that swept the streets in New York didn't like it much, right? Because their jobs were going to go away. So they handed out pamphlets as saying, if you got in a horseless carriage, you might die. Turns out the horseless carriage has been a pretty good thing. So incumbents will always spread FUD, fear, uncertainty, and doubt about innovation.
Yeah. It reminds me of the pamphlets of when electricity was invented, and you had these pamphlets showing people getting electrocuted everywhere, that there was a lamppost or whatever.
When my grandfather-in-law took a job with the upstart American Airlines, and his parents were horrified because he was leaving the stable job of the train company. And they passed out pamphlets saying that the train companies passed out pamphlets saying if you got on an airplane, your body would cave in on itself once you went past a certain miles per hour. Again, silly stuff, but incumbents have a lot to lose. The banks have a lot to lose, and it's not shocking.
They're pushing forward their own digital currency, a digital dollar, the case for a CBDC as well.
Yeah, and again, digital currency is not a cryptocurrency, as you well know. A digital currency is just a digital form of fiat, and fiat currency is bad by design. It consolidates power in the people who can create it by fiat, by decree. And for millennia, right, since the beginning of time, every government that had a fiat currency has eventually fallen. Every empire has eventually fallen, and it comes from excess debt created by crony capitalism and government largesse. And the only way out, right? Once you get in debt, there's only 4 ways out. You can pay it back. Can't do that. You can restructure it. Can't do that because someone has to take the restructured deal. You can default on it, but if you do that, you get kicked out of office, or you can devalue it away. And that is a choice every politician for the history of mankind has chosen. That's what they're doing right now in Europe, in Japan, in the United States, even in China, although they have a little different problem in their currency appreciating versus everything else. But digital currencies are not cryptocurrencies.
Just along those lines, El Salvador, there are reports now that they may be creating their own stablecoin, the colon dollar, which is a disappointment to some Bitcoiners who were hoping that legal tender would be focused on, in terms of a digital currency on Bitcoin. But what do you make of this new possible entrant in El Salvador?
Yeah, to your point, governments and governors presidents and people who govern are never going to give up fiat, right? They're just not. And will they have to succumb to the fact that some of us will opt out with a portion of our wealth into networks like Bitcoin? Absolutely, it's already happened. Will they be forced, I believe, to follow El Salvador's lead to make Bitcoin not the, but a legal tender? And at some point, it will become a reserve asset, right? It won't be the global reserve currency, probably for many, many, many decades, if ever. But it certainly will be a reserve asset, just like the dollar, just like the yen. And there was a time when people didn't think the renminbi would ever be a reserve asset. Today, it's held in the SDR at the IMF. So innovation happens, and it comes along slowly, and people fight it. And the incumbents, the reason a government wants a digital currency, it's awesome for surveillance. It's awesome for control. It's awesome for pushing a button to create more rather than, fire up the printing press. But the big thing, and this is the scary part, I don't know if you've seen the video of the guy from the BIS talking about why they want a digital central bank currency. It's like, well, then we can control how you spend your money.
Yeah, I did see that.
If you're allowed to.
That is terrifying.
That is one of the most horrifying minute and 37 seconds I have ever seen. And I'm a hyperbolic person, and that is not hyperbole. It is a horrifying minute and 37 seconds, and everybody needs to see it, because the ability for a government to control how you and I spend our money is insane.